The events, the only tradable occurrences, guys. You need trading events in your life. There are too many traders who trade without trading events that dictate their trades. And some of you might think you are trading an event, but you're really not. Let me give you an example. Most people are trading a feeling, but feelings aren't events. Most people are trading their thoughts, but your thoughts are not events. Most people are trading their beliefs, but your beliefs are not events. Here's a trader who's trading his thoughts. I think the market is about to turn here. That's not a freaking event. You think? Oliver, I think it's going to turn here. Like, nobody's going to let you trade their money thinking, I think it's a bottom. I think it's a top. I think it's a trade. I don't want your thoughts. Your thoughts betray you. Your feelings betray you. I feel we're at a top here. I can just feel it. Nobody wants to risk money on your feelings, but most traders are doing this. Most traders are trading their thoughts, not events. Most traders are trading their feelings. Most traders are trading their beliefs. I believe that when this does that, it's a buy. That's not a trade. What you believe, drop this. Catch yourself when you're trading a thought, trading a feeling, trading a belief. I'm going to give you what to trade so that you don't have to do this novice nonsense. Specific events, well-defined. And here's what they are. The only tradable occurrences you need. Elephant bar. If you followed my work for any period of time, you know this is the main event. An elephant bar is an elongated bar, a surge, if you will, something that is powerful, impactful, has a little bit of violence in it, and it's slightly bigger than most of the bars to the left of it. What makes the elephant bar so powerful is that you and I can't make one because it takes a lot of money to make an elephant bar. So why do I call it an elephant bar? I call it an elephant bar because it's the footprint of elephants. What's an elephant? Institutions. Big money, not your neighbor. Like your neighbors, your friends, your family's buying, they don't move anything. I don't want to see the footprints of your uncle, your cousin. I'm not interested in what your cousin is doing. I'm interested in what this multi-billion-dollar hedge fund is doing. You see, I look for big elephant footprints, not mice. Your relatives, not important. Sorry. Yes, they're important, but not when it comes to this. Your friends, not important. These elephants wish they could hide their activity from us, but we're elephant hunters. We're elephant footprint hunters. That's a footprint of a mice, not interested. That's the footprint of an elephant. That's meaningful. Here's something interesting about elephant bars. They represent 65% of all trades. Think about this. This represents 65% of all trades. You can literally make a living just off elephants. That is enough to make a living. 10% is not enough. 65%, you can just be an elephant bar expert and make a living just off of elephant bars. So this is the most dominant event you will ever trade. Now, the way you do them is you buy into the elephant bar, but in the latter part of the bar's formation. So if this is a 2-minute chart, you want to buy in like around 1 minute, 30 seconds, the latter part of the bar's formation. Why? Because if you buy into it too early, it could start off as an elephant and drop all the way back down by the end of the 2-minute period. So you want to get in to the bar when you know there's not enough time to turn it around. See, 1 minute, 30 seconds of a 2-minute bar, it's got 30 seconds left to reverse it. That's not enough time in most cases. But if I buy into this bar and it's 10 seconds and I've got 1 minute, 50 seconds left, that's a lot of time to eliminate this. So in the latter part, I use 1 minute mark is the earliest, but the best is 1 minute, 30 seconds. If it's a 2-minute. If it is a 5-minute, you want to do it in the latter minute and a half or so. The entry, that's the anticipatory entry. If you miss it, you can do the confirmation entry, which is the next bar as soon as it goes a little bit higher than the elephant bar itself. So if the next bar, I'll do it this color for you. If the next bar is like this, you can buy right above the bar. But in most cases, you want that anticipatory entry in the bar toward the bar's formation. Now, when is this best played? Coming out of tight and narrow. Boom! Here's an example of an elephant bar. How do I know this is an elephant bar? Visually, it's very clear that this is an elephant bar because look at all my green bars before it. On average, this is way bigger than most of the green bars to the left of me. That's an elephant. That's not my cousin. That's not my uncle playing around with his Charles Schwab account. That's big money right there. Now, you want to try to get into this bar, boom, before that bar finishes, and you can put a stop right under the event. That's called an event stop. Notice the narrowness, your 20-period moving average, your 200, and your item, tight, narrow. Grab the explosion out of the narrow. Make sure you get the whole move. Don't get shaken out. I would say this is a 13 moving average here, not an 8, and maybe out here. It's a beautiful thing. Look at the narrowness. Grab the first bar explosion out of narrowness. That's an elephant bar. How do you grab it? How do you grab the first bar out of the narrowness? You enter the bar itself, if it's an elephant, right before the bar finishes, 1 minute, 30 seconds, if it's a 2-minute bar, what have you. That's your initial entry. And I would like you to add to your play on what I call the first color change. What's a color change? When red eliminates a green. Right here, red eliminates green, or right there, red eliminates the green. That's called a color change. So my traders are always entering on the elephant and adding on the color change. Now notice that your 20-period moving average is a bit far away. So I would say that you want to use your 8-period moving average to capture the trend. And you're probably out somewhere over here. That's a freaking powerful thing, traders. You see what I meant when I said earlier, simple, oh, so powerful. We glorify complexity as human beings for whatever reason. I don't even know why. We somehow intrinsically feel like if it's not complex, it can't be that valid. But this goes against most truths in life. Most of the most powerful things in life tend to be simple. And also, the simpler your approach, the easier it is for you to consistently follow it. The more complex, the odds are you're not going to follow it consistently. Here, look at the narrowness and the flatness. Look at the flatness of your 200. Look at the elephant bar. Boom, get in that elephant bar before it finishes. You can put a stop above the high or a stop above the narrow state. I like that. All right. I prefer above the narrow state. Mandatory add on the first color change is a little late, but still, boom. And you're probably not using the 20 to capture all. You're probably using the 8-period moving average here and out. You're going to do the same thing over and over and over and over again. I'll tell you a quick story. I'll tell you something funny. I get invited every single year to a variety of firms that want me to train their traders. And every single year, there's this one firm, every single year. This is Oliver, we're glad to have you back. We've got 850 traders for you to train over the weekend. And just have a question. We just want to know, are you going to teach something new? And I'm like, no, there isn't anything new. So you mean it's going to be the same thing like, grabbing the move out of narrow state? Yes, there is nothing else. You want me to teach you something that doesn't work? Or you want me to teach you something that works? And this is a big flaw of a lot of traders. Give me a new tactic. Give me a new indicator. Give me a new platform, a new mentor, a new technique, a new course, a new method, a new They're always newing, right? That's not how you gain consistency in this game. You find what works 80 to 85% of the time. And you just do that the same way every single time, forever. You gain consistency by trading consistently the same way. You don't change, you don't tinker, you don't try to find something new, you don't try to make it better. If you've got the 80 to 85%, you can't improve on that. Just do it the same way every single time and let the numbers fall where they fall, people. Stop tinkering. Stop searching, stop looking, you understand? And dig in and build some freaking roots somewhere and let this thing grow strong. Stop moving all the time. Be still. Now, guys, that's the elephant bar. I told you is going to represent about 65% of your trades. This is going to give you an additional 10%. So if you add tail bar plays to your arsenal, you're going to be up to 75%. 75% of all trades are elephant bars and tail bars. How do we buy bottoming tail bars? We buy above the high of them. Boom. We buy above the high of tail bars. We buy above the high of tail bars. Now, it doesn't matter whether the tail bar it has a green top, a red top, or no color. That's not the point. The most important part of the tail bar is the tail. That's why it's called a tail bar. The body, the little tiny body above the tail is not important. Now, stop calling this a tail bar, guys. Let me show you. Stop calling this a tail bar, please. That's not a tail bar. Tail bars, like 80 to 85% of the bar's entire range is tail. That's a tail bar. This is a wick bar. If you've got to pull out a freaking magnifying glass, it's not a tail bar. If you have to think about it, is that a tail bar? It's not a tail bar. Tail bars are so in your face that there's no thinking. It's almost all tail. You don't have to think about that. But if it's kind of like there's a lot of body and there's a little tail, like that's not a tail bar. If you have to think, if you've got to squint one eye and tilt your head like that to the screen, it's not a tail bar. Stop being sloppy with your identification. This is how you make your money. No sloppiness, preciseness, exactness. So we buy above tail bars. And of course, there's the topping tail bars, which are the reverse. We know that. Then there's, guys, the almighty bull 180. This is where you have two large bars back to back of different colors. So the first, you get a bear elephant bar down, which suggests weakness, and followed immediately by an even more powerful bull elephant bar that takes out the entire red elephant bar, takes it out and moves higher than the high. Boom. Where's the entry on a bull 180? Boom, right there, anywhere above the high of the red bar. Stop below the low. Now, again, guys, this is best. This will be best. Remember I told you there's your wide here, right? Down here. Here was your narrow, your stop. Boom, came out of the narrow and is dropping. You get this there, you're going higher. If you get this there, see the tight and narrow? And then boom, you're going higher. And we're going to start, I'll talk to you a little bit more about trading from the locations, very important. But this, guys, this will happen another 10% of the time. 10% of the time. So we're up to 85% of all trades. Remember, elephant bars are 65%, tail bars, 10, and now 180s are 10. You got 75% of your trading is just 3 events. And this is the most powerful. Write that down. This is the most powerful event. Now, the last one, which makes up pretty much the rest, is your color change. Simple color change. Now, this looks like a baby 180, and that's basically what it is. It's just really a simple flip from one color to the next. So this is a bullish color change where your green bar trades above the high of a red bar, and that's your entry. Now, this will tend to be beautiful off of something like off the 20-period moving average. Beautiful. Or even off the 200, but I like bigger bars off the 200. The small color changes are best off the something like the rising 220. Beautiful color change. Like your stock did this, see? Boom! And this makes up about 15% if you want to count it all. So think about it. Elephant bars are 65%, tail bars are 10, 180s, you got the full thing. So elephant bars are 65%, tail bars are 10%, 180s are 10%, and 15% are these 4 things. The only 4 things that you will ever risk your money on. But we're going to make it really powerful. This is what most people are not doing. They don't have 4 things they know they can describe for you in detail for you and say, I only risk money on these 4 things. How many traders you know doing that? No, they're trading their feelings. They're trading their thoughts. I think this is a buy today. The news says the earnings, the this and the that, the market, the government, and that's how their trading results look. Their trading results are all over the place. There's nothing consistent, nothing detailed, nothing exact, nothing the same way every single time.